Let's take a look at what's going on with Dogecoin today. Alright, so I'm looking at .173 as a target potentially right now. Let's go ahead and check out why. Because we have this little run up, we have consolidation. I was talking about this on the last video. Then we have a possible pennant flag pattern, something like that. If we drag from the bottom of the pole to the top of the pole, something like that, we drag this to the breakout, and we could be looking at a target of .17359 approximately. If we could get some more volume, actually the volume looks pretty good as well though. Look at declining volume, and then we got some green candles. It'd be nice to get some more backing that up. We also broke out of this Fibonacci retracement level right here. Let's see, what is it? The 61% level at .139. That's where we also broke this resistance right here. We were watching this flag pattern, boom, 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 boom. Watching the tops for a breakout right here. We were watching this line. We're waiting for a breakout to the top or to the bottom. We actually did break to the downside. That's the other thing that I wanted to talk about, is in a falling wedge pattern. This was kind of slightly a falling wedge pattern. It was getting a little tighter, or it wasn't like a straight flag pattern. But anyways, in a falling wedge pattern, you can break below the bottom, bounce back up, and if you break up here, then that's actually a confirmation. This was, I forget what it's called, but yeah, it's just basically not being able to stay below it, come back down, get forced back above it. Then when we break through here, it breaks out. I mean, it's like a confirmation once we break out right here that this was like a falling wedge pattern, and we came up and hit this top already. But I've been talking about the falling wedge pattern in a bigger time frame. Let's go ahead and zoom out, because this is what I'm kind of looking at similarly. We didn't break below this support line right here like it did in the other one, and then bounced back to the upside. But still, it's the similar pattern, and that's what I'm kind of hoping that we can do. Boom, and then let's see what happens at that point. Hopefully, I mean, I don't think it might not just look like that, but hopefully we can get there eventually. Maybe we do a flag pattern, come up here, another flag pattern, boom, and then I don't know, bounce on these and then break out or whatever. We're gonna have to wait and see. It might just go boop. But I still think that this is a flag pattern, little flag pennant pattern. We broke it going to the upside. We're getting some pretty decent volume. I mean, the volume is declining. It'd be nice to get some spikes in volume. That would be another confirmation. Let's take a look at the daily time frame, 9 moving average real quick. We did break back above that. Let's go ahead and delete this. We'll delete this. We'll delete this. I'll also talk about the Fibonacci retracement levels, because that target lines up with the Fibonacci retracement levels. But we have this blue line right here. We've been watching it. When we break above it, then we can bounce on it going to the upside. When we break below it, right, like right here, we come into it and we get resistance, and pushes us down. When we're above it, it helps push us up. When we're below it, it helps push us down. So we broke below it right here, and then got support on the 180 moving average. I kind of mentioned that I was kind of wondering if we can get support on these moving averages, because when they are resistance, and you break above them, after you break above things, a lot of the times it'll start acting as support. And we didn't quite come down and touch it, but it did kind of go around that area, bounce, and then bounce to the upside. So maybe this 180 moving average can give us support now, and we can start bouncing on that as well. We broke above. Okay, so let's look at the 9 moving average right here though. On the daily, that's one of the ones I really like to watch. Something like this. We broke below it, and then we broke back above it. Now let's see if we can stay above it. It looks like we came up here. We came down, tested it, sitting at around 140, something like that, and then it looks like we're kind of up here now. Like we tested and we kind of bounced on it. So let's see if that can continue to head to the upside. That's also a good thing, pointing us in this direction, in my opinion. We also broke that Fibonacci retracement level. We also broke the top right here. We also broke the bottom, but this was like one of the things I was thinking about too, when if we broke to the downside, like one of these could hold support. But yeah, we did break right here. That's also a good sign that we at least could be heading up to the next Fibonacci retracement level. And let's talk about those real quick. I have these Fibonacci retracement levels from doing the Fibonacci retracement tool from the bottom of this run to the top of this run. So we get the tool, we drag from the bottom to the top, and that gives us levels to watch. Let's go ahead and readjust this a little bit. Okay, so I like watching these levels because we usually have support and resistance on them. Right here, we had a little bit of support. We dipped below it, came back above it, broke that level right there, and now we're like halfway to the next one already. It kind of seems like. So since we're heading up, I think the next one would be, let's see, where's that next Fibonacci retracement level? Dot 156. So that could be a next level that we could be watching, but the target that I'm more looking at is dot 173 because there's this previous resistance right here. We have this falling wedge pattern, this big falling wedge. We broke above it. We broke this resistance, broke out of this channel pattern at this resistance trend line. Boom. Falling wedge pattern. First target was the first resistance. Second target is the second resistance, and third one is the third one. And these levels are sitting at the second target that we're looking at is right around dot 1735, dot 174, somewhere around there. And then the next one is sitting at around dot 2205. And if we could break above that little wick right there, sitting at around dot 229, 230, then I think we can start looking at bigger targets. If we could break out of here, boom, then that'll be much even better than just this little box that we've been kind of trading in for a while, which is still good, actually. There's been some pretty good movement. But yeah, I still think that we might be coming in here, at least in the short term. I like these patterns. Like I was saying in this little one right here, sometimes they come down and then come back up. You know, it's kind of like a psych out. I think that's what it's called. And yeah, come down, boom, and then break out, and then perform even better, kind of thing. So, but yeah, there's also that continuation pattern that it's very possible. We had a nice little run, consolidation. If we get a nice little run, that wouldn't be super surprising. I guess we have some trend lines that we can watch. We have this bottom right here, something like that for at least now. Let's go on the 4-hour time frame. And then there's also this one right here. Since we're moving up, let's look at the bottoms. Let's do a trend line on this little area right here. Okay. Yeah. I think, yeah, we're on this little uptrend right now, and if we break that going to the downside, that might be a sign that we might be coming down and retesting this Fibonacci retracement level, but I think the next stop might be here, dot 156. It's possible we do something like this. Let's drag this out a little bit more. Let's see, maybe it's possible that we do something like this, and then boom, and then, or something. I don't know. We'll see what happens, but that's just what I'm kind of thinking. Those Fibonacci retracement levels sometimes act as support and resistance, like I was saying. If we break them, then that's a good sign. Let's see, what was the other thing that I was looking at on this one, though? Yeah, something like this. But yeah, we broke that. Actually, let's just leave that one right there. Okay, so we're on two uptrends. We're on this uptrend right here. Boom. And then we're on this uptrend right here. As well as this flag pattern. Boom, 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 boom. Breakout. Declining volume. Whoops. Let me get that one here. Declining volume. Getting some decent green candles. So yeah, we just need to continue that. Get those nice solid green candles. Even if there was bigger pumps would be good as well. I think that about does it though. Let's take a look at the daily time frame and weekly. Above all the 9 moving averages and 180 moving averages on the weekly, like right here. This blue line, the 9 moving average. This orange line, we are above both of those clearly on the weekly, which is good, and we're still above it on the monthly. I'm kind of curious about this chart actually. Let me clean up this stuff real quick. On the monthly time frame, we have 3 days and 11 hours to close this candle where we're at or go higher and stay above the 9 moving average, and I've actually broken above it. And that's on the monthly time frame, so that's actually a good thing. Actually broke through it down here, and ever since then we've been kind of having trouble. If we could break back above it and stay above it, then maybe we can start bouncing on it, going to the upside, and that's on the monthly time frame, so that might be like a nice little run possible. When we break above it, we broke above it right here, boom, came back, retested it, got on a little bounce, and then not a little bounce, it's actually a big bounce, and actually that's when we started up like the bull run, or another bull run. Right here it didn't perform so good though. We broke above it, and then kind of just like went sideways into it. So it could go either way. That's why it's kind of interesting, but it's actually a good sign though. Sometimes it can be a good sign that we break above it, like this one definitely worked, and then we start bouncing to the upside. Maybe we could actually break out of this resistance right here, and if we do break out of this resistance, then we could start heading to the next one, which is sitting at around .280. And yeah, those are some of the things that I'd be watching. Let's see, so the monthly looks pretty good. Looks like the 9 moving average is there. Weekly looking good. Daily looking pretty good. Yeah, it looks pretty good. We just broke above that 9 moving average. And then yeah, on the 4 hour we're looking at that flag pattern, something like that, something like this. Boom, drag this to the breakout, looking at a target of around .173, which lines up with the 38% Fibonacci retracement level and this previous resistance right here. Let's go to the daily time frame again right here so you can see a better look at it. We have this resistance right here that lines up. Whoops. We have this resistance right here that lines up perfectly with that 38% level, and that's what I mean. These Fibonacci retracement levels act like they just come into play. The resistance, support, resistance right here, found support right there, got to bounce to the upside. I don't know, and even, you know, just in general, look at this, boom, support right there, or it went down below, lower, but it went above right there. They're good to watch and to play off of, in my opinion. That's why I watch them so much. But resistance, next target, flag pattern, bounce to the upside. Let's see what happens. I think that about does it though. If you guys like the video, hit the thumbs up. And if you want to watch the last video, check it out right here. If you're new to trading, check out this playlist right here, and it'll help you get you started. All right, I'll see you guys in the next one.